What's going on, guys? Happy Friday. Welcome to week 11 of my portfolio review, where I go over my buys and sells as well as my gains and losses in the portfolio. So without further ado, let's get right into the video. As you can see today, I'm up $439.33 at 1.6% growth. I lost $87.54 during the after hours at 0.31. The reason for that $87.54 loss was due to Disney. Disney lost $1.30 during after hours trading, and I will go a little bit more in depth in a minute. So for the week, I'm up $1,572.85 at 0.6%. For the month, I'm up $2,024.35 at 7.84%. For the last 3 months, I'm up $5,282.50 at 23.41%. For the year, I'm up $7,241 at 35.14%. And all time, I'm up $7,135.23 at 34.45%. So now we will go down and scroll down and go down to the buys, and it will be very brief as I only added 5 shares of Bank of America. That was the only buying that I did. And I have buying power of $601.80. So what I'm going to do is I'm going to do something a little different this week. I'm going to click onto each stock and let you guys know my strategy, my holding strategy for each stock, and let you know if anything's changed. So we'll start off with Disney. So last week I was up $118.62 in the stock. This week my total return is only at $99.62, with me having a total return of 0.88%. Now, the reason for the dip in Disney was right before the bell rung, they announced how they will be dealing with the rights offerings for the Fox shareholders for them buying their company, as next week Disney will gain full ownership of the Fox assets that they sought to purchase. So, with the amount of people who wanted cash versus stock options, I think it was like 52% of the voters voted for stock options. I'm not 100% sure on that, but it sent the stock tumbling down during the after hours. So as you can see, it is exactly $1. It's $1 away from my average cost. So if this should go below my average cost, I am ready to load up, as I have the $601.80 ready to deploy into Disney. And I will also jump out of my GLAD position and potentially CRF to continue to load the boat onto Disney. So that's basically my strategy for Disney. Disney will be a long-term hold. I don't see me selling it for the foreseeable future. It'll probably be like a 10-year hold. So we are into Comcast. This was the first major acquisition that I did with my portfolio. Comcast today, it reached a new 52-week high, as the stock saw at least $40.52 growth. It finished out at $40.47. Currently, I am up 15.49% at $564.56. Last week, I was up only $325.36. There hasn't been any new news this week in Comcast. I do know that they brought a company last week. It's called Blue Apron, or yeah, Blue Apron Security. They're an online security firm, as well as 3 weeks ago, I believe they have become the biggest investors in the Acorn app. So they have some shares in Acorn as well, the stock app Acorns. So I do plan on holding Comcast and enjoying the ride for and the future growth from Comcast. Okay. Next is Bank of America. This is my company that I currently have in my sights and am looking to gain a large position in. The stock finished at $29.30. My current average cost is $28.62. Last week, I was up only 90 cents. This week, I have a total return of $6.75. My target will be to buy about 5 shares each week. So I have an additional 18 weeks of buying till I get the correct position that I want in Bank of America. So that's what we have with Bank of America. Give me 1 second. The phone's acting a little slow. All right. So next is Aurora Cannabis. Now, Aurora Cannabis has been my biggest mover this week, as they revealed that they hired a new strategic partner in Nelson Peltz. He is on the board of Procter and Gamble, and he will be looking to help them potentially brokerage a deal, as they will be looking for a partner to. They'll be looking for a partner with for their company. So today I earned $371.70 for a total return of $1,883.51, and the total return is 57.74% growth. Last week I was only up $863.99, so I gained a whole $1,000 inside the growth. I will continue to hold this stock as they are waiting for a partner, and that's why I will make the decision on whether this will be a long-term hold, or I will be taking some of that profit. So Aurora Cannabis is good with me. I love everything that they are currently doing, and I have no problems with them. So they'll be in. Next, we have Apple Hospitality REIT. This will probably be my only company that I will be receiving monthly dividends from, as I am looking to keep this into my portfolio. I love the business model. They are being a little stingy with the dividend, which is understandable. I look forward to seeing how their business model plays out once a recession hits. As what they said, what their current strategy is trying to hold as much capital as possible, and then when a recession hits, they will try and get as many acquisitions as possible for companies that are looking to go under, companies that will go under during a recession, and also maintain the business with that capital that they are not paying out. They currently pay out a 10-cent dividend, which I will be receiving $20 next week. As you can see, the dividend. I'll be receiving a dividend next week for $20.90, which I'll probably be putting right back into Apple. So I didn't mean to back out that far. So Apple, my average cost is $17.35. They finished at $16.45. Last week I was down $229.82. This week I shaved off a little bit of that. I'm only down $188.02. But I'm not really down as I just showed you. Give me 1 second. I'm going to show you my dividend payouts. I've been receiving a dividend for basically, I've held this stock for a whole year as March 15th. Yeah, today is my 1 year anniversary of holding this stock. So I'm happy with the company. The company will stay in my portfolio. Next, we have Glad. Glad has been another great monthly dividend company that I've held. My average cost is $8.75. I have a total return of $79.84 for a 5.31% return. This equity inside this company is strictly for if one of my bigger companies goes down, and it's not like a market problem. If one of them has any fundamental issues, I can where I am still up on Glad, I will gladly just pull out of Glad and put that money into that stock. So that is the play with Glad. So this $1,500 will go into, let's just say, if Disney goes down, I'll place that money inside of Disney. And that is the same thing with my closed-end fund, CRF. This is another dividend play. The appreciation has been terrible because I brought it kind of high. My average cost is $13.68. It tracks basically all of the things, and I brought this when they were at all-time highs. So I am currently just holding the stock, trying to let the appreciation catch up to it. But if it doesn't, that's okay with me. I will utilize that capital to help out any of the bigger stocks if need be. And the following week, I will receive a dividend from them for $20.05, which I will be applying back to my portfolio. And that's pretty much it for my stocks. I appreciate you guys checking out the video. I know that this was a longer video than what I'm used to producing. I will be going right back to my short videos probably next week. If you guys have any comments or questions about the portfolio, just let me know in the comment section, and I'll get back to you as soon as possible. Thanks.